Hi everyone, Roku reported second quarter earnings results, and in this video I'm going to review those figures. I'm also going to update my recommendation of Roku stock. Coming into these earnings results, I had Roku stock rated as a hold. You're going to want to tune in to see if I'm changing that recommendation. So let's jump right in. Looking first at revenue, which increased by 11% to 847 million. The loss from operations, though, worsened to 126 million from 110 million in the same quarter the prior year. Thankfully, though, these losses and these investments are resulting in increased user signups and increased user engagement for Roku. Active accounts increased by 16% to 73.5 million year over year and 1.9 million quarter over quarter. The headwind for Roku is marketers are spending less dollars. Our average revenue per user decreased by 7% year over year as marketers have pulled back on spending at the first part of 2023. Surprisingly, though, other ad-supported companies have reported I shouldn't say big, but increases in spending. Namely, if you look at Alphabet and Meta platforms, which gained revenue of 7% and 11% respectively from the same quarter the prior year. So it's not all ad-supported companies that are experiencing decreasing revenue. It's more bifurcated market in the second quarter, as evidenced by Roku's falling average revenue per user, and also Snap experienced decreasing revenue as well. So it's a bit of a mixed advertising market right now. The Roku channel, which is Roku's free ad-supported viewing, was 1.1% of US viewing time in May, showing evidence that Roku's investments in that free ad-supported viewing experience and content is starting to pay off. Folks can now buy a Roku smart TV and they theoretically don't need to sign up to any paid service. They can watch pretty good content, a wide selection of content just on the Roku channel. And maybe if you download YouTube and you got a lot of ad supported free viewing, and you don't need to pay for any of the paid streaming services. Management is forecasting third quarter revenue of 815 million. The third quarter is typically not the strongest quarter for Roku. That's the fourth quarter. That's when investors are hoping to see a big jump in revenue from Roku. So, to update my recommendation of Roku stock, I did not see enough from Roku in this quarter to upgrade my recommendation. They did make some steps forward in the active accounts and the progress in the Roku channel. Although I would like to see better results from average revenue per user, and I would like to see that loss from operation flatten out and start to make progress upward before I upgrade this stock to a buy. So for now, I'm keeping it rated as a hold. But that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.